The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the March 3rd fantastic Friday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. We do not make that one little 2x4 shift. It means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648, 727-445-1044 is the other number you can get us. Of course, you can send me an email, steve@tfnn.com. In fact, that reminds me, there was an email that came in late yesterday that I didn't get to. I'll try to look at that on the break. You can always send me a ping through the Tiger's Den. Of course, telephone calls are preferred. So right now, let's go get this show started on Fabulous Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading down 10 points, so we got a flat market, 20,992. S&P is off 2, trading at 23.79. NDX 100, totally flat, trading at 53.63 out there. So not a lot of movement in the indices. The transports have been up all morning for the most part. They're up 21 points, about 0.25% out here. Gold's off $5. Silver's up 4 pennies. Light sweet crude up 55 cents. Leading the charge here, individual stock-wise to the upside, you've got Tesoro Inc. up $5, 3%. Insight up $4 or 3%. Nettie's up $3.50. Applied Opto Electronics up 7% or $3. Biogen BIIB, that's up $3. Priceline is up 3. Snapchatter, it's up a couple of bucks. That's about 10%. To the downside, you've got WPP PLC. They could not come up with enough P's inside the name of that entity, down nearly 8% or $9. AutoZone not in the zone today, down $8.50. About a little over 1%. Costco's off $7. Nutanix down 6. Cooper Companies down 4. The Cracker Barrel is selling Twizzlers. It's in the red. It's off $3. Hey, how'd you like that? I thought that was pretty cool. On Sunday at the Academy Awards when they dropped some candy out of the sky. What was it? Those mints. What do they call those mints? Thin mints? Is that what they call them? Thin mints? Something like that. And what else was it? Mints and. I remember I heard one time they were dropping Mike and Ike. As a kid, you probably had some Mikes and Ikes. And of course, they should have been sending down the good and plenty. But anyways, let's make this show good and plenty. Where do we want to start? Well, I'll tell you where we start. We've got an email already here from John. John in Sarasota, who's not in Sarasota. Today he is in San Juan, Texas. And he says, please, an update on the QQQs, plus or minus, with 3 question marks out there. So, that's a good place to start. Let me do this. I'll do the Qs for you first. Then let's go take a look at the S&P. In fact, let's just go ahead and stay. I don't do it that often, but since John had requested, let's go ahead and stay with the index ETF structures. But since this is the end of the week, and because we have, John, conflicting signals in the daily charts out here, and we'll try to cover some of those conflicting signals out here, usually when I get confused, I try to go to the next level higher, right? Take your game to the next level. In this case here, stop taking a look at the daily charts and go take a look at the weekly charts. Cut out some noise, see if the picture is clearer. So I'm glad that you asked that question about the Qs. because I meant to do it anyways, or I think I was going to do it, but now I'm definitely going to do it. Hey, you get to it already. I hear you saying, I'm just looking for, okay, it's this panel right here. Here's the ETF for the weekly charts out here. Now, if we take a look at the cues, John, what you're going to see out here is you're going to see a lightning bolt pattern, an A to B equals CD. And the benefit of this tool is that it helps us to project price, where price is headed to. Now, what I've done here to use as my A point of this lightning bolt pattern, and inside the cues weekly chart, we know the cues, you and I know the cues, that what they do at bottoms is they make bottoms with volume. They make tops with light volume, but they make bottoms with volume. And so August 24th, 2015, that low is our A point, 84.74. Price runs up into a high that gets formed to form the B point. That's on the trading week of November 30th, 2015. That's at a price level 115.75. Volume there, 158 million shares. Now, if we take a look at the this week here, when price tried to cross in August of 2016, light volume. However, when we take a look at what it did on September, the week of September 12th, 2016, major volume, 180 million shares. That gives you what we'd like to call a confirmed A to B equals CD to the upside. Now we have our price measurements. Inside the cues specifically, this is where bullish and bearish reversal candles are so very important, especially as you start to get towards the pattern completion area. Well, in the case of the cues on a weekly basis, you will see as price heads up to that level that first began on January 23rd, the 1-to-1 area, 125.85. No bearish reversal candle that week. The week after, the week after, the week after, even the week after, which would be last week, and now this week out here. So what that says to you and I inside of the QQQ series ETF, if we just simply rely upon it to give us our message and the weekly time frame, this says prices head to 134.28. There is no minus. It is just plus, going to be adding to it. That is where price is headed to. Now, on the minus side, if we're going to try to figure out where the level of support would be, we don't use market profiles or anything along those lines out here. We have to go to where the first bearish reversal candle formed on a weekly basis, which was the week that began December 26, 2016, which also happened to be as price was getting back to the all-time, and I do mean all-time, 2000 high out there. The top of that session, that was a bearish engulfing candle. Top of that session, 121.52, becomes your level of support. We're trading at 130.85. So if things take a reverse to the downside, the daily basis, again, we're looking at the weekly charts out here, that's where you would look for a first level of support. But we do not have that right now. So that is on the cues out here. Let's take a look at the SPYs, shall we? And if we take a look at the SPYs, here's a weekly chart for the SPY. This takes us back into the 1997 time frame. Now on this chart, what we can do, that was pretty weird, what just happened to my screen. That was really weird. It's not a screen that you guys saw. In any event out here, we're going to go to this break. When we come back from this break, let's start by taking a look at the horizontal trading range boundary lines inside of the SPYs. You can see how these act as really good levels. These are the weekly ones of support and resistance. This says the SPYs want to head to 249.74. Can you believe it? Steve Rhodes from TFNN. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 27, S&P down 4. A lot of the Fed heads speaking during the next, hour. I think it's Yellen who starts speaking, or if she has not already. So we'll see some changes in price direction out here, and we'll try to give you. No, we won't try. We'll just give you the levels that you should watch at the end of the day. At the end of today's trading session, I hate that at the end of the day, or however it is that they try to use that. In any event, we were taking a look at the index ETFs out here. You know how much I love those. But we're going to still take a look at it, and we're going to take a look at it because all of you have access to it on your own charting applications. And this application here, this tool, if I go ahead and pull this off to the left out here, this helps us, and it's a weekly chart, so you're taking a look at green lines out here. This helps us to identify the largest number of opens and closes when we take a look at the body of the candle being the essence of price. And that level, that price point, by the way, let me give you the actual number out here. Display weekly, there we go. The largest number, I put in the wrong thing. Hello, Steve-O, pay attention. Oh, I know. I've got to go all the way down here to type it in. There we go. Okay. Oh, and then I got to go back and, man, oh, man. Good thing I'm not driving right now. Let's see. There we go. Okay. So the largest number, the two price areas with the largest number of either opens or closes, this is taking a look at data going back to 1996, is at a price level of 133.40. There were 41 either opens or closes close to that price area. Not necessarily exactly on the dot, but very close. The second most common area during this time period is in at 114.04. There are 40. So you take that price difference, 114.04, 133.40, and now you have your price areas to identify these horizontal trading range levels. And what we can see is they act as good areas of support or resistance. For example, when price back in 2014 was getting up to this 210 area, we can see that price stalled there. In fact, it stalled there all the way until July of 2016. July 2016, it was finally able to take that level out. And even that being said, it came back one more time, one more ping facility, tested it back in November 2016, and then it was off to the races. Now it made it to its next level, 230.35, and this says 249.74, give or take, happens to be its target. That is on a weekly basis. So that's one tool that you and I can use. We can use another tool, just like we did with the Qs, and we took a look at A to B equals CD patterns. Let's go do that out here. So our A point on this, we're going to go ahead and use, we're going to come down here and use the February 8th, 2016 level. That'll become our A point out here. So here inside this is the SPYs. Our B point, I'll probably just go ahead and use this right here. That's the week that began June 6, 2016. And for the C point, we're going to use June 27, 2016. So you can see right now we are at the 1 to 1.272 A to B equals CD level. If this area, if we don't see some type of bearish reversal signal that would form next week, then this would say that price heads up to, how about that, 249. Let me go ahead and put that horizontal trading range line back on there. That's also, so we have a second with regard to that motion that price wants to head to the 249 area, our A to B equals CD, as well as our horizontal trading range level. Now, if we pull this back even further, what we can see here, well, maybe you can't see it that clearly, but if we take a look at utilizing the SPYs to identify the Elliott wave move out here, I'll just use a green arrow. Here is your first wave. That's your first wave. It's important to identify that first wave because the fifth wave is going to be equal to or greater than that first wave. So, John, asking about the Qs, you may be asking about the SPYs with regard to longer term. Where are things headed to? Here's your wave number 3. Okay, so if we take a look at that, here's wave number 3 out here. I'm hoping that I'm still on the air. I just lost something, but it looks like I am. So there's there's our largest wave. So your corrective waves inside here, we'll just go ahead and make those with red arrows. Thank you, Jay. With red arrows down here. Here's wave number 2. Here is wave number 4 out here. And so we're right now into wave number 5. So all we need to do is just simply go measure the high of wave number 1. That happens to be right out here in May of 2011, down to the low in 2009. So right about here, we'll just create a little rectangular box. Now all we need to do is add that to the bottom of wave number 4 to give us a price projection. So if we do that, this is going to give us a price projection. Here, I'll just use a line at the top of the box, and that's going to be approximately 249. 249. Now we have a triple. We have a triple Lundy that is underway inside of the SPYs. We have 3 indicators that simultaneously are giving us a price projection of 249.60. Where do you think the SPYs are headed to? This is irrespective of any kind of short-term correction that we get that could last, 2 to 4 to 6 weeks out here. But that is where the SPYs are headed to, utilizing a set of extraordinary technical tools out here. So that's what the weekly charts, and to me that just really clarifies what's going on. Of course, you would like to know what's going on in the short term. So in the short term, we have to go take a look at other tools. So other tools being, hey, what's going on in the advanced decline oscillator reading for the New York Stock Exchange, for the NASDAQ Composite, and the Dow. They are all below zero. That is the bottom panel on Stevie's charts going from left to right out here. So they're all below zero. This means that sellers are in control. They're doing a basic lousy job of being in control. They do not want to mark down price. It doesn't look like we're going to save much this holiday season out here. I don't think we have a holiday coming up, but they're really stinko at being able to push price lower. So daily chart is saying, yeah, sellers are in control. It's like a football team that's got the ball, and they're starting on their own 20-yard line. At this stage here, I think they just took a penalty, and now they've got, first and, instead of first and 10, they're like, I don't know. It was a holding call, right? So what's that? Is that a 10-yard penalty out there? So now they're first and 20, half the distance to the goal line out here. They're not doing a very good job, even though they're the ones that are in control. There's nothing. I'm equivocal about that. That is clearly what the message of the advanced decline information is providing to you and I as we speak right now. But you and I also go take a look at the volatility index. And as we take a look at the volatility index, it's because there's gobs of liquidity. That's why sellers are just simply throwing a tizzy out here. And I do mean a tizzy. If we take a look at that volatility index, it's well below its 50-day exponential moving average. That happens to be priced at 1194. We're trading 1143 out here. Very hard for sellers to get things going when there is gobs of liquidity inside the marketplace, and you cannot argue. So that is that. We have the other scenario, meaning the volatility index getting above the 50-day exponential moving average. Then we've got something to talk about. Now, for those of you that are VIX aficionados, when we get back from this break, you can't always just look at the spot VIX index and even the 50-day and say, man, this must mean we have a top. I'll show you what else we've got to look at as soon as we get back from this break. Steve Rhodes with TFNN.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Before we go on to the VIX index, I did want to pass along this piece of this little nougat off to you. What we were taking a look at the SPY on a weekly basis. We took a look at the Qs on a SPY on a weekly basis. By the way, we did get a Tom DeMark signal last week. You'll see a red number 13 on this chart if you're watching us on TigerTV, and that's called the TD combo count. Now, the last time that we obtained inside the weekly chart for the SPY a TD combo count was as it was topping out back in August of 2016. So we want to just simply be aware of that. Of course, there was no confirmation until we saw a close below Stevie's red line. That took another 4 weeks for that to occur, which was in September 2016 out here. And that was during the unfavorable seasonal cycle. We are in the favorable seasonal cycle. Nonetheless, the price point or price area to be watching inside of the SPY is 233.05. That is Stevie's red line. That's the calculation right now. That certainly will change. But any close below 233.06 will go ahead, and the way that Stevie does it, confirm that TD combo count out there. Otherwise, 249, 250 is where the SPY is headed to, the S&P to the 2,500 area. Even if we get a retracement, you want to be able to buy the next dip. You just want to, because these markets are going to move higher into those levels. Now, with regard to the VIX, I had learned this the hard way, so I'm going to teach it to you the easy way. A low VIX, and I do mean a low VIX, can oftentimes be the indication of a top inside the market. But it doesn't always work, does it? So what do you have to do to really put that together to figure out when a real top occurs out here? It is when things really get out of whack in the spot VIX index. Sometimes people, they get carried away and believe that a low spot VIX index is just, it's insane. It means complacency. You know all the words that are out there. I cannot trade that. What I can trade is patterns, right? We're pattern recognition specialist, you and I, the whole gang out here. And if we take a look at the spot VIX index, there we go, right now trading at 1138, and we compare that to the furthest out futures contract, in this case here, it's this one right here, priced at 1805. It is the November, that's right, November 2017 futures contract. Now, let me show you what I mean out here. Let me just try to smush this. That is a technical term. If we take a look at the top that formed back in August of 2016, what we can see here is you'll see this is panel number 2. You're going to see a calculation that shows a top at about 79%. I like to look for something at right around 80%. 79% qualifies for me. And what that is representing is the price difference between the spot VIX and the furthest out futures contract. You then take that difference, divide it by the spot, and then that's going to give you a mathematical formula. In this case here, 79%. Once you see those, and it doesn't always happen, typically doesn't happen on the day that occurs. It is relatively soon thereafter. Can be on the day, but typically not on the day. But when that difference gets into that 80%, the higher the better, and then you see it turn down, that's typically when you start to load to the downside. That's where things get out of whack. In this case here, as we speak right now, the actual calculation, you can see also back here when we saw a signal inside the S&P, the SPY's this way, well, it's the S&P, there was an island top that formed out here. This is how good this signal works. We got up to 76%, and that was the difference between the September contract. This was back on January 27, 2017, the September futures contract and the spot VIX. If we take a look at 1140 today, don't get carried away. The percentage difference between it and November's contract out here, we're only at 58%. There's actually nothing out here that is really unusual with regard to identifying the top. So what's the volatility? So it's not so much what it's the spread that is the key. Don't just get focused on just one number out here, 1140, and don't even just get focused on Stevie's 50-day exponential moving average. Remember, we have to kind of like shelve that because it hasn't really been working as a signal for us these days. Instead, you have to go back to other tools that work. And this one here is a beauty, and that's why we go ahead and use it. In fact, I've got questions out here that came in and said, hey, Steve, since the Trump rally, the market's gone up such and such percentage. Isn't that the sign of a top? Of a significant top in the market. It's just come too far, too fast out there. You've probably heard many people ask that same question. The easiest way that I can answer that question is not because of some knowledge that I have. It's the knowledge of going back and take a look at charts and trying to figure it out and say, well, okay, what happened? So how do we do that? Well, in the eSignal charting application, it's really very easy to do that. If you take a look at my data panel, that's that little box here on the left, you see I can go right down to where the bottom formed, and you will see it says bar index in that box. It says minus 17. So it's minus 17. So I know that we have been moving in essence higher for 17 weeks. That's a weekly chart that I have on the screen. Forget about the day. And that the rate of change from that low right now as we speak is 1408. So here's what I'm going to do. I'm going to go ahead and change this red line. We're going to go ahead and put in the price point of 14.08 from a weekly perspective. That way, if we squash this down, we use weekly data. Then what you and I can do is come back and say, geez, did a prior instance of a 17-week period that had a similar or greater rate of change, right, from 17 weeks prior, did that mark like some type of, top out there? It just can't be stretched and go higher out here. Right, mathematically, right? You kind of follow the logic. Look, maybe the logic isn't so logical, but it's my logic, and let's just go with it. So the last time that we saw this, by the way, was in March of 2013. Remember, it's a weekly chart out here. Now, you tell me, in March of 2013, did that call the top? Is that something that really called the top out here? Who are we kidding? Not even close. Not even close, not even in horseshoes out here. Now, we go back a little bit further where that rate got up to 20% before some type of short-term-ish top had formed out here. That takes you back to March in 2012. But did it call it even right then and there? No. If you go back a little bit further into the January 2012 time frame out here, you got up into the 16% there. Remember, only at 14 as we speak right now as of 1:37 in the afternoon. Did that form some type of top? Goodness sakes, no. Out here, these are acceleration moves. These are not blow-off top moves out here. When we go take a look at this percentage change, this is called momentum. That is out here. I mean, you just have to go back, put it on a chart and stuff like that. That's why I hate when I see some of these guys on TV and they just feed this stuff out there or they throw it out there. And a lot of times people just won't do the work and then go try to figure it out. Take a look at back in October of 2010. That doesn't mean that I still don't expect some type of retracement. It's that. Hey, remember that 249 level that we took a look at in SPY and we take a look at this? What do you think the odds are that at least that level is going to be hit here? Probably at some point in time between now and July. Steve Rhodes with TFNN. We have not come too far or too fast. All it's telling us is we're going further. Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. So it was from Dan in Clearwater, Dano in Clearwater yesterday that said, can I take a look at the SM8s? I shorted this at 76.03. Do you see this as a last gasp before it retraces? Looking for 70.74 as a target. Stop is at 78 buckaroonies. So let's take a look at. So if Dano, if we take a look at the semiconductor index, so I'll take a look at two charts for you. If we take a look at the semiconductor index out here, the SOX, I can see reasons why you would go ahead and take a short-term short trade in this. Number one, it formed one of our favorite patterns here, and that was a seventh wave move. That was on the trading day of right here on February 22nd. Nice little doji, a true doji. A doji is where the open and close is virtually the same. In this case here, it was the same. And then, of course, we had the leaves falling from the trees. That means that price moved lower, actually formed one of those three-river evening stars out there, and price closed below Stevie's red line. Stevie's red line inside the semiconductor index is 986.75 out there. So I would be watching that. We can see that the sellers are truly lined up here short term. Dano, you've got a nice evening star, 3-candle configuration, a bearish ash candle on the 28th, bearish engulfing candle yesterday. So we can see that you got you have sellers that are trying to hold the line. So I'm glad to hear that you have a stop in place. Now, with regard to the SMA specifically, what I would be looking for as stops here, you've got a stop of 78. I like the stop of 78. Why? Because the top of its daily TAS market profile 77.32. The top of its weekly is 77.22. The actual swing point, though, that this could be targeting on any move higher is priced at 77.82. I like $78 as your stop. So kudos to you on putting your stop in the right place. Maybe not $78 even, Steven. Buy a penny or two one way or the other might be helpful. But let's not be splitting hairs out here. Now, what we can do, you say you have a target of 74 out here. Here's what I would suggest to you, here's what you really need to see in order for you to get a target of lower price, and that is this must break 75.59. That is the bottom of its daily box out here. Now, there happens to be a swing point from February 24th that has 1.3 million shares. You're trading into it today with 1 million shares. The straight line math says to me it's actually kind of pushing lower with volume, but you want to see it close inside of 76.75 out there, and you're at 76.69 as we speak right now. So you've just got this kind of wobble here. No big volume, no big anything. The benefit is if it does get below 75.59 for you already got your stop in place, then what we have is a market profile, weekly market profile, by the way, that formed just this week, brand new profile, that has a bearish bias to it. That point of control at 76.01, close to the top of the box. So really key in order for this trade to work out for you, for this to get below 75.59. You've got the topping patterns, no question. Another intermediate level of support for you is going to be that gap, that sign of strength out here. Even though it wasn't with much in the way of volume, 2.7 million shares out here, still this 74.55, 74.87 is going to be perhaps a little tough sledding for you. So best of luck, and sorry that I couldn't get to it yesterday. But today is another day out there. Okay, so now what I haven't done is we haven't taken a look at gold and silver and all those glittery things out there, and I am sure there are several emails requesting that. So let's go get to it already. You've got gold trading down at 12.27. If we just utilize a couple of important tools out here, well, we know gold has broken a trend line, so the trend is no longer to the upside inside of Goldilocks. Pure and simple. It doesn't matter how you want to draw the trend line. The only ways we can draw the trend line, it has broken through the trend line. So we'll go ahead and take that off of our screen out here. It's broken through a channel line. It's broken through a trend line. That is not a good feeling out here if you are long the shiny metal. Number two, what we have is gold is trading below its TAS daily profile. That's a stinker. That is a stink bomb. That should have held that support. Now, the day's not over. The price you're looking for is 1230.60. What happens if you get below 1230.60, close below it? And it did close below, it did not close below yesterday. If you close below it, that's strike number two to suggest that gold wants lower price out here. Now, where is gold going to trade to? You know, that is the it first has to break through the February 15th area. That low, by the way, 12.17. That's not much further. It's $10. No big deal out here. But you break through that, and then we'll take a ride on a reading. That'll take a reading down to the January 27th level and get into the 1182 area. What we know is it does not look promising for gold. It has broken a couple of important levels out here. And what is going on inside of the Japanese yen and the U.S. dollar currency pair? Well, prognosis does not look good for gold because yesterday, it closed above its daily market profile. That says you want to go up to the next level. That's 115.17. You're trading at 114.57 or thereabouts. So this wanting to move higher should put pressure on Goldilocks. If we take a look at silver out here, it is flat for the day. Is that good news or bad news? It's no news out here. If we look at silver, this thing is down below daily profiles out here. 1812 was the number. It's headed to, or looks like it's headed to, 1723, the top of its weekly box. If we draw a trend line, let's go see if the trend is still its friend out here. So if we draw a trend line, has this been broken? It has not been broken. So if there is any savior out here, anything that is bullish with regard to silver, is that if it trades below today's lows, those lows being 1766, give or take, a few pennies, then it too will have broken its trend. And but right now, the trend is still the friend as I take a look at my trend line inside of silver. Not the case with gold, but that wide-ranging bar from yesterday, yes, it is ugly. We know that markets do not end on wide-ranging bars. At least you have taught that to me. And then today would show you we've got a kind of stalling action out here. Now, speaking of stalling actions, what's going on inside of the XAU? Yesterday, you and I took a look at it. We said it looked like we were going to go ahead and get one of Stevie's these convergence out there. We know how well that convergent pattern worked because we also looked at that on the ES Mini on a 30-minute chart, and we gave you a price point of, what was it, 22.83, which is exactly where the ES Mini got up to. Boing. Then began trading lower the rest of the afternoon out here. Now, we've got one of those stalling patterns because of that same condition out here. And you'll see that in the XAU, you got a little doji. Now, does this doji really mean anything? It just means the market is stalled. It's not support. You can't use it as support. As some people like to use it as a halfway marker. So for those of you that like to use it as a halfway marker, well, then you can go ahead and calculate the move, and that doesn't look good. Do I take a look at it as a halfway marker? No, I don't. It's just simply telling us right now it's uncertain. We knew it was going to get uncertain when we took a look at that little convergence of that little rainbow of lines out there. So it's really doing what it should. Now, what it should do, either those lines are going to move down or silver's actually, or XAU is going to bounce up into that 88-ish type area out here. But caution, Bill Robinson. The yen continues higher, continues to weaken. Gold will continue to weaken as well. See Rhodes, TFNN.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new market-safe core commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI oil, and sugar, in one powerful CD. With no pricing caps, you can potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
TFNN has just launched a special event in Tampa with Tom O'Brien taking place March 18th, sponsored by Nadex. Tom O'Brien will be presenting 2 workshops for a combined 2.5 hours of education, bisecting and dissecting his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. March 18th kicks off with a continental breakfast as we get everyone checked in, and that is followed by 2 75-minute workshops with Tom O'Brien. The first workshop from 8:45 until 10 a.m. will cover quality volume, cause and effect, and ABC structures, and the second workshop from 10:15 until 11:30 a.m. will cover swing points, testing, and the Tiger Gartley. Tom will then wrap things up with a question and answer session, which will be followed by a Tiger Luncheon Social on the rooftop of the Westin Hotel. The best part is that it's all free, but you must register to attend. Visit the front page of TFNN.com for all the details and to sign up today, and we hope to see you in Tampa on March 18th.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back folks. So Greg writes in, says, hello, Steve. So I say, hello, Greg. Could you go over the ES Mini 30-minute time frame this afternoon, your long or short view? Happy to, Greg, and thanks for sending an email. Right now, we've got the ES Mini trade out at 2379.75. We've got the 30-minute charts on my, or the 30-minute chart on my screen out here. You're going to see basically 4 lines. Let me do this. Let me turn off one set, the market profile lines out here. We'll turn those back on, but we're going to turn those off for the moment. The most important level out here is a price point of $23.74.75. Those of you that are looking for a top in a market, if the ES Mini at the end of today's trading session were to, in fact, close below $23.74.75, I'd say fire away. I'd also say if you see that little puppy on Sunday start trading above that level, cut your losses. Look for the next trade. Wait again. Now, you need to use a point or two with regard to a stop out here, but as long as price is above that, the message is clear to Steve-O. And that is that the message is bullish inside the marketplace, just matching what really we just spent the last, good, half hour of the last hour taking a look at when we looked to the longer term picture of the market. We took a look at the VIX index and we really said, hey, the volatility index is just fine at that level. Maybe if we take a look at all the futures contracts, there's only a 56% spread out there. That is not what is associated with market tops out here. So as long as 23.74.75 is held, and you'll see how that level held and was tested several times. This is a 30-minute chart here, so it's really just tested twice. That is an important level of support. So that's numero uno. If we take a look at what's going on inside of its market profiles out here, now you're going to see 3 lines, red, blue, and green. The red at the top of the box, the green at the bottom of the box out here. This says, look, as long as price is traded above 23.74, in this case here we'll round it down to a quarter, then everything remains bullish. Now, we can also see there may not be much to the upside that you're going to see inside the ES Mini. So, Greg, I'm going to say you're trading right up to a level where if it breaks above this area of resistance, we're going to go ahead and put a different line. Let's make this one let's make it a purple line. For purple haze out here, we can see this nice little bearish engulfing candle. This was at 7:30 morning on March the 3rd, so that engulfed the prior session. So in essence, that becomes resistance. We can see right here. Oh, I don't know. Oh, shoot, I shouldn't have selected purple. You gave me that apogee number. We're going to go ahead and just make this. We'll make it yellow. All right. So here is your first level of resistance, 23.79.50. Another area of resistance, another bearish engulfing formed the last half hour at between 1 and 1:30. So if the ES Mini trades above 23.81, we're at 23.80.50, 2 more ticks to the upside. If it in fact takes that out, then resistance will have been taken out. And what you have out here for the day is an A to B equals CD to the upside. That would give you a price projection. It's not really much of an A to B equals CD. It's just really more of a consolidation. In fact, that's what it would be. We don't even have an A to B equals CD. So I'm going to take that back. I'm going to take those breaths of air back and say, you know what we really have out here, Greg? We'd have a little consolidation. And that's where you would measure where price would head to. That consolidation pattern taking you up into the 23.85 level. Now, what's at 23.85? I don't know. But let's go take a look. Let's go take a look at the retracement from the top to the bottom. And a little bit higher at 23.84 is the 0.382 retracement. So that is really no big deal out here. But that would be my take. At this stage here, as we speak right now, price is running up to resistance. This thing could run between 23.81 and 23.74 for the rest of the day. So, folks, have a fantastic weekend, a fabulous Friday. Be safe tonight. Drink lots of cold sake. You'll enjoy it. And I'll see you on Magnificent and Marvelous Monday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.